As many of you know, we are in a crazy housing market, whether you're a first-time home buyer or somebody moving up. And when you're in the process of presenting offers right now, a lot of times you're having to go above the asking price, you're having to waive contingencies, you're having to do things that you typically wouldn't do in a normal market. And a lot of times this is coming from the seller. You're getting these responses back in counteroffers or in multiple counteroffers asking you to do certain things. And, I thought it would be a great video to show you some of the most common, some of the most typical responses I'm seeing as an agent that helps a lot of buyers in this current market, and how you can navigate these items. What do they mean? How can you best respond to make your offer stand out? I'm getting a lot of people asking me, well, what can I do to get my offer accepted? And that's a hard question. So I thought I would go over some of these items and see how I would typically respond so that you can use that and maybe help your offer stand out. And doing things a little bit differently in today's video, we're going to bring up a little side chart here, and we're going to go over each one of these items to give you an idea of what the video is about. These are typical seller responses that I'm seeing in this market. And the first is highest and best. What does highest and best mean? What does best and final mean? Many of you probably know that the seller is asking you to submit your final terms. You're not likely to see a counteroffer or another counteroffer at this point. So what is the best price that you're willing to do? What are the best terms that you're willing to offer, whether it be waiving contingencies, shortening the time frame, talking about escrow deposit, whatever it is, what are you willing to do, to help your offer stand out? Because what I'm going to do, thinking from a seller's perspective, I'm going to take your best and final and I'm going to compare it to the best and final of other people and see which one best fits my needs, whether it's, the one with the highest down payment, the one with the highest price, the one that's waived everything. What are you willing to do at this point to help your offer stand out? So that really takes care of those first two items. And I know I'm not telling you anything you don't know here, but these are, what I'm seeing in most counteroffers, just those words right there, best and final, highest and best, right to start with, without any clarification of any of the other terms in the offer. So you should have an idea going into it, how to present your best offer. So we've discussed both of these items here. Now let's, take a minute and talk about deposit. Earnest money, escrow deposit. What does that mean? Why would the seller be asking me for a higher deposit? It's not their money anyway. Well, what happens is when you present an offer, one of the items that you're negotiating up front or as part of your original offer is the earnest money deposit. This is a good faith deposit that shows that you're serious about moving forward with the contract. And this money could become the seller's money if at any point past the contingency period you back out of that contract. So it's not the seller's money initially. It's still your money as a buyer if you back out of the contract unless you've released all the contingencies. Now, here's the caveat. In this market, a lot of buyers are releasing contingencies up front. They're going in and they're removing appraisal contingency or they're moving the inspection contingency, which both of these we're going to talk about in just a moment. And so you couldn't use either of those to back out, and therefore you're left with only a couple of contingencies or potential contingencies that would allow you to back out. So at which point you've released contingencies in that contract, you are risking that earnest money deposit. And so the seller wants to know that they have a serious buyer and that if the deal does fall apart, they're being compensated. They're being compensated for wasting time or whatever it is, even though they might have backup offers, even though they might be in a position to move forward with something else. They want to know that you're serious and that you're not willing to get into escrow and waste anyone's time. So that's why the seller is typically asking for, a certain escrow deposit. Now, in the state of California, the way the contract's written, if you sign the arbitration and mediation clauses, the seller really can't come after you for any more than 3%. And so what we're seeing in this market is for the escrow deposit to be 3%. So that means if you're buying a home and it's a $500,000 home, the seller's asking you to make your earnest money deposit $15,000 up front. Now, this is money that can be used towards the closing cost or towards the down payment. This isn't in addition to, but if you were to get under contract and decide that you didn't want to move forward after releasing those contingencies, then in theory, you could be risking that escrow deposit. And that's why the seller or the listing agent may be recommending that the seller ask for, a certain escrow deposit up front. The next item is buyer to remove inspection contingency. So as I noted a moment ago, a lot of buyers in this market are removing the appraisal contingency up front. And again, we'll talk about that in just a moment. But in often cases, the buyer may be removing the inspection contingency up front, or in the counteroffer, the seller may be coming back to you and say, hey, other people have released the inspection contingency. We want the inspection contingency to be removed from the contract. Now, what does that mean? That means that, it doesn't mean that you can't get an inspection. It just means that you can't really use the inspection to back out of the contract. So as a buyer, if you do remove that inspection contingency, I would still recommend going through an inspector, having the home inspected, just so you know exactly what you're getting into. Now, as an agent that's been in the business 18 years, helped a lot of first-time home buyers, helped a lot of buyers in general over my career, I don't recommend removing inspection contingencies unless you know exactly what you're getting into. Now, I know in many markets, you're having to do these sort of things in order to get your offer accepted. But, it's hard as an agent to recommend a buyer remove all of these contingencies up front, especially an inspection contingency, just because, there's a couple of reasons you would normally back out of a contract. One is that, there's something in that inspection that you don't like about the house. I mean, that would be one of the main reasons deals fall apart. And so removing that contingency takes away your opportunity as a buyer to back out because of that. So then you're more or less stuck into contract without, using any of the other contingencies to back out. So depending on what you're removing from the contract, you're really limiting yourself on what you can use to back out. So just keep in mind, if a seller is asking you to remove the inspection contingency, that's what they're talking about. Now, property to be sold as is. This is one that I'm seeing a lot of these days, and that's basically the seller coming around up front and saying, hey, we're not willing to do repairs. Now, that's not removing your inspection contingency. They're saying, hey, you're still able to get an inspection, but if items come up in that inspection report, we're not going to do them. Okay. And I will tell you, in my career, I've had many, sellers come back and say the property's to be sold as is, and we've still negotiated certain repairs. But just understand, that's what the seller's saying up front. They're saying, hey, look, we're selling the property in the current condition. You're welcome to do an inspection. And as long as you still have your inspection contingency in place, you can still use those items that come up in the inspection to back out. So you're not risking anything there. So if you're going in with the idea that, hey, the property needs some work, I'm going to remodel it anyway, I'm not really worried about the condition of it because I'm going to change it, then the as is might not be a big deal. But just understand that, that when the seller says that, typically they're saying that because they're not willing to do any repairs on that property for some particular reason. Seller to request a rent back. What does that mean? Well, in this market, sellers depending on their motive for selling, might be moving out of state. They might be building a property. They might be moving to another property, whatever it is. And oftentimes sellers need more time to get out of the property because maybe that new construction property is not built, or maybe they haven't found the home that they're looking for yet. And so what this does is it allows them time to stay in the property after it closes. I'm seeing many buyers agree to this in this market. A lot of times the sellers will pay the principal, interest, taxes, and insurance of the buyer for that period of time. So, they'll take the buyer's monthly payment, which the buyer discloses. They divide it by the number of days they're staying in the property, and they pay that per diem for the amount of time that they're in the property. But in this market, what I'm seeing a lot of is the seller actually either requesting a free rent back and or the buyer giving them a free rent back up front in order to help their offer stand out. So don't be surprised if you have a seller ask for additional time to stay in the property and or rent back, maybe stay in rent free. And or if you're competing against a multiple offer situation and you know that the seller needs to stay in the property, don't be surprised if one of the offers you're competing against is allowing them to stay in the property for free for that period of time, just so you know how to best respond in those situations. Seller to find a replacement home. What does that mean? Well, oftentimes in this market, the seller is selling their property, they're buying something else, so it might be contingent upon them finding a replacement home. Why is that important? Because, oftentimes if that seller doesn't find that replacement home in a certain period of time, they may get frustrated with the process, they may change their mind, they may decide to back out, at which point, if they have that contingency in place and you've agreed to it, then you're out of the property that you were looking to purchase. Even though you were in contract, the seller can still use that to back out. And so just be careful in this market, putting all your eggs in one basket of a seller needing to find a replacement home. I think it's okay if the seller has found the replacement home, maybe in contract on the replacement home. But, I've seen it where there's multiple of these. There's multiple legs to this transaction where the buyer is buying a house, that seller needs to find a replacement home. That seller is buying a home where the seller needs, and so this is this elongated thing. And if any of those deals fall apart, it could put you at risk of losing that property. So just keep in mind, if you're buying a property that is contingent or the seller's asking for that, you know exactly what you're getting into. Contingencies to be removed in X days. What does that mean? Well, the seller might come back to you and change the contingency timeframes in the contract, or request that the contingency timeframes are changed in the contract. Here in the state of California, you have 17 days to do all your inspections, your appraisal, and any due diligence on the property, if you will, review the seller disclosures, the HOA docs, any of that stuff, if the property has an HOA, and then you have 4 additional days, taking it to 21 days to remove the loan. Well, oftentimes the listing agent and the seller may come back and shorten those timeframes. They may come back and change the loan to 14 days from 21. They may come back and change the inspections from 10 days or 17 days to 10 days. And why did they do that? Because they're trying to tighten up the time that the buyer has to back out of the contract. Now, are those timeframes too tight to get it done? No, but it puts more pressure on the buyer to move forward with the transaction. And understand, from a seller's perspective, they're just trying to confirm that the buyer is moving forward and get past that hump, because maybe the sellers need to make a decision on something on their end, and they can't do that until it's firmed up on the buyer side. So if a listing agent is asking you to shorten timeframes or change the contingency timeframes, that's what they mean by that. And the last thing is buyer to cross-qualify. Why would the agent on the other side ask me or you as a buyer to cross-qualify with their lender? They just want to verify that you are fully qualified. Even though your lender, you've submitted a pre-approval package along with your offer, they want to verify that the lender that's pre-qualified you or pre-approved you actually knows what they're talking about, and therefore that's the reason that they would ask you to cross-qualify with their lender. Now, understand, in many times I have my lender just reach out to that lender and provide the documentation. So the buyer doesn't have to do anything. It's more 2 lenders working together to make sure buyers are qualified. Now, in some cases, the agent, is trying to get the buyer to use their lender, so that they, for whatever reason, maybe they just want to know that the deal is going to get done. They trust that their lender is going to do it. And other times they're merely just trying to make sure that you are qualified as a buyer, so that they're not wasting their time on somebody that's not approved. So hopefully this gives you a little bit of guidance if you're out there and you're making offers in this market, and things that you can do in order to help your offer stand out. You could do shortened contingency timeframes. You could go in initially maybe waiving the appraisal contingency, waiving the the inspection contingency if you wanted to go that far. You might come in with a higher escrow deposit up front. Now, keep in mind, seller is usually going to look at price first. A lot of times they're going to look at down payment second, as I talk about in a video here. But thirdly, they're going to look at the terms of the contract. So hopefully, if you don't have the strongest down payment, maybe you can stand out in other ways by making the terms more favorable. So hopefully, again, that gives you a little bit of guidance. I didn't mention earlier, but my name is Jeb Smith. I'm a real estate broker here in Southern California. My channel is all about educating buyers and sellers in this environment. So if you find value in this, do me a favor, hit that subscribe button, give me a thumbs up if you found this helpful. And if you have questions for me about this information, about anything regarding the home buying process, do me a favor, leave them below. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.